Hi there. How have stocks in Kenya performed today? Let's do a quick analysis of the 13th of July performance when it comes to equities or shares, specifically at the Nairobi Securities Exchange. I'm going to be examining shares across the 13 sectors to look at who the biggest gainer is and who the biggest loser is, and try and make sense as to why that is the case. You are all much welcome to my channel. My name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing insights around stock market, making money, and investing each and every day. And by the way, this is a new series. I began today. If you love it, comment down below. Tell me you love this series and you want me to be making these stock market analysis videos each and every day. While you still at it, drop a like on this video and also subscribe. Having said that, overall, the market performed quite well because the NSE 20 share index had a bump up of 78 basis points. Of course, it's a slight increase, which is 0.78%, but that is a good increase as opposed to dipping or even being in a doji. And then when you look at the individual sectors, starting with the agriculture sector. In the agriculture sector, the biggest gainer was a company called IGADS, which gained 0.33%. And then the biggest loser is a company called Kapchorwa Tea Company Limited. This is interesting because Kapchorwa Tea lost 3.76% on its stock today. This is interesting in that the IGADS gains are sustained. Being in the coffee sector specifically, it does export Arabic coffee and also does produce for the local market. And with the recent announcements, most of by the president about 3 weeks ago, with regards to revamping the coffee sector, IGAD's stock has been on a run. And I hope it can sustain this particular upwards trend. And then for Kapchorwa Tea, which has lost 3.76%, this is mainly due to profit taking in the market. It isn't really based on the company fundamentals because Kapchorwa Tea is also doing decently well, despite even the global changes in the tea prices, because this company, even looking to the end of July, is expected to complete its dividend payout. So it's doing well. It's just that investors also typically take out profit when there is a sustained run in any particular stock in the market. And then the second sector is the automobile sector. Under the automobile sector at the NSE, we do have only one company, the Car and General Limited. And today, the stock of Car and General increased by 4.38%. And this was because of increase in investors' confidence following the company's strong profit growth announced earlier this year, and of course, recent declaration of dividends. Despite the automobile sector also being partly impacted by the Finance Act, which came to force about 1.5 months ago, it is going strong, okay? And then the third sector is the banking sector. And the truth is that the banking sector at the NSE, guys, has been on a crazy run most over the past 1 year. And today, the biggest gainer is HF Group or Housing Finance, which gained 3.3% on its stock. And the biggest loser, which according to me is just a market adjustment, was Cooperative Bank, which reduced its stock by 0.29%. So HF Group is an interesting one because earlier in the year, HF Group did announce a 250% profit jump. Basically, its profit hit 1.6 billion, up from about 400 million in the previous year, 2024 versus 2025. And that really did bolster its position because even beyond that, the company went ahead to even have an employee share ownership plan, and it also has invested very heavily in state loans. So all these are playing in favor of HF Group, which is actually on a run in the banking sector. And of course, Coop Bank, as I've said, its stock dipped by 0.29%. But according to me, that's not a cause of worry because this is more about a broad market consolidation. And that's so because we all know Coop Bank is a mature company and is strong even on dividends end. And that's why the banking sector, Coop is the one which seemed to lose a lot, but it didn't even hit 0.5% dip. And then under commercial and services, we had interesting disparity. Under commercial and services, which has companies like media companies and also publishing companies and a few other companies too, there was a juxtaposition in that the biggest gainer was Nation Media Group, which gained 1.96% in its stock today. And then the biggest loser was Standard Group Limited, which lost 5.31% on its stock. Of course, Nation Media Limited did benefit from the positive tone across the wider market. But specifically for Standard Group Limited, I think, guys, Standard Group Limited is experiencing some interesting challenges. At the center of it is the persistent financial challenges, okay, around delay in payments, thus making its operations quite tricky. And of course, these really also weigh on investors' confidence, because at the end of the day, the forces of demand and supply at the stock market are dictated by sentiments. So if investors' confidence dip, also the stock of a company is gonna dip. And that is exactly what is happening on Standard Group's end. And then the fifth sector, construction and allied. Guys, this sector is confusing, has been confusing for the past few weeks. There is no standout performers. In fact, most counters did close lower or remained unchanged. And this so because of pressure on raw materials and costs being high and even tight liquidity conditions. Because we all know this sector really requires huge amounts of capital. So if there's tight liquidity conditions, it becomes quite tricky. And that's why the construction and allied sector hasn't really gained traction in recent years, recent weeks, leave alone today. And then the sixth sector is the energy and petroleum. This sector is also interesting in that the biggest gainer in the sector is KenGen, which gained 2.26% on its stock. And the biggest loser is Umeme Limited, which lost 0.54%. But that is not a cause of concern. I'm going to explain why. KenGen specifically has been on a run, more so since earlier in the year, when we all know, of course, KenGen announced it's also getting into renewable energy. KenGen is the biggest producer of energy in the country. So it getting into renewable energy, and Africa and Kenya also having the untapped potential and high need of energy more so in the future, when more and more data centers get established in the country and other big consumers of electricity or energy, this play by KenGen is going to have a very big upper hand. And that is backed by investors' confidence. Thus, its stock increased by 2.26% due to investors' confidence and interest. And then the company which lost big in the energy and petroleum is Umeme Limited, which lost 0.54%. But that is not a cause of concern, because Umeme Limited was a cross-listing company. Umeme Limited is a Ugandan company which had been cross-listed at the Nairobi Securities Exchange, and specifically was because of the heavy lifting it was doing last year, the need for capital in Uganda. And there was a transition between Umeme Limited letting go that particular distribution of electricity to the main electricity distributor in Uganda, which completed end of last year. So it is in the process of winding down, and there's no cause for alarm on that end, because this is a cross-listed company from Uganda. And by the way, if you didn't know, sometimes across markets, companies do cross-list. For example, even at the NSE, the Bank of Kigali is cross-listed at the NSE due to the ability of Bank of Kigali tapping into higher capital in Kenya compared to the capital size in Rwanda. So that's not a strange thing, okay? And then the seventh sector is insurance. Under insurance, the biggest gainer was Kenya Reinsurance, which did gain 1.81% on its stock. And the biggest loser was CIC, which I think also was quite negligible. It did lose 0.67% on its stock. For Kenya Reinsurance specifically, this was supported by renewed investor confidence and also after valuation comparison, which showed it has an attractive PE ratio, okay, or price earning ratio. Its PE ratio was above that of the industry or sector, thus causing investors to have renewed interest due to that improved valuation, okay? And then the eighth sector is investment sector. Investment sector specifically, we had interesting changes or interesting gains. Close of last week, there was not much movement, but as of today, Centum Investment has gained 1.39% on its stock, while Olympia Capital has lost 0.29% on its stock. That's the biggest gainer and the biggest loser. As to why Centum has increased by 1.39% is because of recent strategic asset sales and also because of the action around traffic green rate listing. Remember, traffic green rate listing was listed at the NSE sometime in June, early June, okay? And in fact, not early, end of June. And this listing is backed by Centum Investment because it is a subsidiary of Centum Investment, which did push for that particular listing and is the one backing that particular listing. So that combined with recent strategic asset transactions has really also improved shareholders' confidence in Centum stock. And then Olympia Capital, I think, is seeing bad things, guys. And I'm saying so because this dip of 0.29% seems small, but it is a reflection of investors' feelings, more so after earlier in the year, profit warning, and it reporting the biggest revenue decline in 20 years. That really hit the market, and of course, it's also being reflected in investors' confidence up to this particular point in time. And then, section number 9, investment services. This is the self-listing by the Nairobi Securities Exchange. It did dip by 0.21%, but this is no cause for alarm. Remember, NSE doesn't sell any goods or products out there in the market. It is a basis of this listing of the companies. So it dropping by 0.21% is mainly a reflection of broad market consolidation as opposed to being the fundamentals of NSE itself. And then the 10th sector is manufacturing and allied. Guys, manufacturing had interesting dynamics because the biggest gainer was Unga Group Limited, which gained 2% on its stock, and the biggest loser is Afrimega Agriculture Corporation, which lost 4.69% on its stock. As to why Unga Limited gained is because of its strong earnings momentum, continuing to support sentiments. Of course, now investors are more confident in it, given sometime a few months ago, Unga did have a gain upwards of 500% on its earnings. And as to why Afrimega Agricorp has dropped by 4.69% is due to mainly profit taking by investors and also sense of uncertainty. Remember, Agrimega Corp did have change in management. Currently, it has an acting managing director who began acting in early June. That acting capacity and also creating some sense of uncertainty does sometimes have an impact on investors in that they become quite uncertain. And then the 11th sector is telecommunications. Under telecommunications, we have Safaricom. Safaricom stock today gained 2.57%, which I think, guys, is very amazing. Of course, Safaricom has been on a crazy run because of its strong business performance and also it having very distinct competitive advantage in the market across mobile money transfer, which is M-Pesa, calls, and even its expansion efforts in the region through the Ethiopia expansion efforts. So I foresee Safaricom stock continue to perform well in the long term due to these particular endeavors. And then the 12th sector is real estate sector. Real estate didn't really have any change because under real estate, we have listing of two rates. It didn't have any change because trading remains muted in that this sector operates in an interesting way because it has close-ended structuring and limited liquidity in the open market, okay? Unless the backing companies do maybe transact, rarely is there liquidity in the open market, okay? And then the 13th sector is ETFs or the exchange traded funds. ETFs had a mix of results in that we have two ETFs, Satrix World Equity and New Gold ETF. Satrix did gain by 1.49% on its stock, and New Gold ETF did dip or decrease by 2.46%. Of course, the ETFs typically move based on the backing or anchoring assets. Remember, ETF is a collection of different assets. So, for example, the New Gold ETF did dip because that's a reflection of the drop in the spot price of gold at the global market. Therefore, the USD did gain against the gold. reflecting in this particular ETF by it dropping by 2.46% today at the Nairobi Securities Exchange. Guys, that is today's report with regards to how NSE has performed more so when it comes to stocks. What do you think about it? Which of these stocks or even other stocks out there are you banking on to have an improved rally at the NSE in the course of this week? Comment down below. Let's continue discussing. Cheers, guys.